Ladies and gentlemen, welcome to the Big Tech. I'm just going to finish it. Big Tech Frenzy. I'm so sorry. We need to rename this show. The live streams that I do are called the Big Tech Frenzy, and the market monitors are. I just can't get around this name. How is everyone doing, ladies and gentlemen? It is a Friday, but it feels like a Monday. I don't know if that's like for everyone else. Happy New Year. Hopefully everyone had an amazing time. I took the girlfriend out last night. We went and got a little bit of surf and turf. That was fun. Well, she got more turf than surf. She doesn't really do seafood too much, but I enjoyed a steak and a buttery lobster. So that was fun. Hopefully everyone's doing well. Let's jump in to the market news. Okay. Let's bring up the market. How is everyone? NVIDIA up 1.6%. SoFi up 4.5%. Nebius up 6.8%. Google probably not going to do as good, flat. A little bit sad. Some of the Mag 7 names not doing great. Bitcoin doing really well. Up to 90,400. Ethereum up to 3,125. That leads BMR to do up 13.7%. We also got a video from BMR, Tom Lee. Maybe we can listen to that in a little bit, but just going through and talking about why they need 50 billion shares. It's definitely good that he addressed the issue. I think the last video that they made of, hey, go say yes, and this is where you go and nothing else, was a terrible idea and a big mistake on their point. Coming back and trying to address why things were or why they need to get 50 billion shares, a little bit better. Obviously, people can disagree. But yeah, I think 50 billion is way too high regardless, but at least we have some clarification. Any news on Palantir? Palantir down 4.9%. I didn't see anything. I was actually just talking about this in my other live stream, but Palantir is a $400 billion stock. I was saying in the live stream that, if they continue to put up higher and higher, growth rates, like if they come out next quarter and say, hey, we're going at 65% and we have even higher than 40% net income margins, and that rule of 40 just continues to grow and grow and grow, there's no end to what valuation you can put on Palantir. Okay. You can continue to run up the name further and further. Like that's how we get to that sort of Dan Ives $1 trillion market cap, is if they just keep expanding at faster and faster rates. If they show any weakness this year and slow down growth, then that changes the trajectory of how Wall Street is going to plot their growth over time. Okay. So I don't know if there's any weakness today. I didn't see anything, but I'm going to stay away from this name for now. People are going to regret not trusting Tom Lee and selling their position. I mean, I'm not selling anything. And it's not because of Tom Lee. It's not that I've given up on Tom Lee, but there's definitely a reputational hit. What I'm trusting in now is Ethereum. And as long as there's no additional types of raising other than like just at the money, offers of BMR, then I'm fine. But I'm a believer in Ethereum. That's what's holding me up. I'm a little bit worried about Tom Lee's calls, his comments versus what the rest of his team is saying, and then his compensation structure of just getting to 5% of Ethereum rather than any performance on Ethereum or something like that. Why sell anything ever? Just always buy. I mean, yeah. Obviously, it doesn't make 100% sense, but I do try to aim for something along those lines. Look at some of these software names. Klaviyo down 8.4%. AppLovin, Carvana, Bill, Workday, Intuit, MongoDB, Navan, Palantir, Adobe, Fair Isaac, ServiceNow, Zoom, Toast, getting freaking killed, man. Now, maybe some of this, killing actually had to do with this video. Here, let me just bring this up by Ray Wang from Inflation Research, where he talked about uh, tinyteams.xyz, which is essentially just an arbiter of the different companies that are raising not only massive rounds, but have a ton in assets or average. I'm messing that up again. Annual recurring revenue. Sorry, my lips were fasting. Can I actually talk right now? My lips were moving faster than my brain. I'm truly not putting together the sentences that are in my head. Like, I want things to come out and I'm just saying different words. I also feel sick. Okay. Just sign off. Dude, I don't know what's going on. I feel sick. I'm not making any sense, but boy, oh boy, am I having a great time. It's a beautiful new year, and I feel very positive going into this year, regardless of how the market is potentially cooling or changing as things go on. Let's go ahead and watch this video really quickly.
All right, it's the first trading day of the year. Let's talk tech stocks and the Mag 7 with Ray Wang, Constellation Research Chairman and AI Forum co-founder. Ray, great to see you. Happy New Year.
Happy New Year.
So when you look at the outlooks for 2026 by the Wall Street banks, they all really come down to what they think will happen with the AI trade this year. So what's your outlook for, I know when we say AI trade, we're talking about a lot of different components of the AI trade, but what parts of that trade do you think will strengthen, and will you think that some of it could weaken this year?
Well, definitely we're going to see strong demand again for chips. And we're also going to see a bifurcation in terms of apps and software companies that are able to use AI and create what we call AI exponentials. These are companies that can grow 10x, 100x, 1,000x with very minimal number of employees. We're also going to see a category of software where we're going to see applications, SaaS applications transferring themselves. And so one of the ways we looked at the market, we said, who beat the NASDAQ in 2025 and who's going to beat the NASDAQ in 2026? And we looked at some of the laggards that were not beating the NASDAQ. We had C3, Now, Apple, Meta, Oracle in that mix. And we went back to see, would they be able to survive and make it? And then we also looked at 5 other stocks that had outperformed. Could they continue the momentum? NVIDIA, Google, AMD, Intel, Palantir were 5 that we chose to be able to make that move.
So you're keeping NVIDIA as one of the winners of 2026. What makes you so confident that that momentum and certainly that excitement among investors will continue?
Well, the acquisition of Grok confirmed something that we all realized, was that training is about to come over the hill and inference is about to pick up. And that's where you're going to need TPUs. And that licensing deal was brilliant on all levels, from a financial engineering perspective, from a risk sharing perspective, and more importantly, allowing NVIDIA to get into the TPU market, which is the chips that allow you to do inference.
And you mentioned learning and inference. There's this view that actual gains in the LLMs has not so much come to a halt, but certainly slowed down. Is that a risk that we're seeing, if not a sort of stalling in progress, or certainly not living up to that expectation, perhaps more of a commoditization with the LLMs? And what stocks or other companies will that feed into?
Well, you're absolutely right. And this is why it's important to look at a full stack vertically integrated player like Google, where they're able to go from chip at TPU level to agent level. And what Google has is the ability, if you've looked at Gemini 3, it continuously gets better because it's got all the data sources. It's able to actually take the full one Google, put it to use, and start applying that on almost every direction, which means they've got a huge advantage because they've got the data.
And you mentioned these companies that can, use AI to start up with 1 or 2 employees and reach millions of dollars in revenues. So Is that something at this point that's investable, either on the private market side or eventually in the public market side? And what kinds of companies or what areas of the market will those be successful?
They're all across the board, and that's what makes that exciting. There's a site called tinyteams.xyz, and what you can see there are companies with 10 employees doing 200 million ARR, or 20 employees doing 200 million ARR. And these are companies that are about to hit IPO next year. So you see companies like Midjourney that are there, Lovable. These are the companies that are at Cursor. These are companies that are changing the environment with few employees, massive impact, and that's on the software side.
Yeah, I'm looking at that site now, Tiny Teams. I mean, you look at this 10 million ARR, 40 million ARR. So this idea that AI can actually help a single founder create a company with instant revenues. I mean, this shows it's actually happening already.
Robert, it's happening right now. And what we predict that in the next 3 years, 1,000-person company could take out the likes of an Accenture. 100-person company could take out the likes of our big SaaS winners that are out there, because the scale is incredible right now.
Ray, I know you mentioned that you think Oracle is misunderstood, and the idea that there's been this big rethink of their huge CapEx investment strategy to become a host for a lot of these sort of AI platforms maybe is not going to pan out. You think that this is actually a fruitful pursuit for Oracle?
In the long run, yes. If you've watched all the moves Larry Ellison has made over the last 50 years, it's been incredible, right? Sometimes he waits it out, says it's not worth the investment cycle. Sometimes he jumps in. And for this one, they really believe there's a shot for them to be one of the NeoCloud winners. And if you look at the relationships at the administration level, you've never seen that tight of a relationship. And so those two factors alone, the fact that you're seeing TikTok go to Oracle, you're going to see other organizations go to Oracle because they have a cost advantage that the current hyperscalers do not have. And in some of our clients, when we send them to Oracle, they're paying 1/5 of what they were paying Amazon, Microsoft, or Google.
I mean, you guys are calling him AI. I think he's just excited. I've had a couple he talks like a second grade teacher, which I don't even mind, but he's just trying to get people excited about what he's looking at. And I agree. Now, Tiny Teams is this right here, where it's just talking about the team size and the annual recurring revenue from all of these businesses. Obviously, there is a potential that artificial intelligence is so amazing that it goes ahead and replaces a lot of these existing businesses that have potentially thousands of employees to do similar work. But most of these companies, I'm not talking about Cursor here, but some of the other ones here that are listed, it's not a very long list. Or it is a long list, but most of these companies are features and not entire platforms. They do something very unique and they do it well. And sometimes not even well, but, a new type of product, a new class of product. And that has attracted a lot of revenue up front because people are trying out these products. But we'll have to see over time if people continue to pay month after month after month for these types of services because they yield such a result. I've tried some of these things, and like one of them was for YouTube, Descript, this AI platform that's going to accelerate the way that you edit videos and everything like this. I found it mostly crap. So obviously there's going to be these types of products that look at a service in a different way, but what's probably going to happen is that people that are editing, they're going to just learn that like Premiere, Adobe Premiere is going to use some of the services that Descript might have brought to the market, and then people are going to continue to use what they already know. We need to address Adobe itching to start a position. There might be an opportunity there. I just don't use their products, and there might be an opportunity. I like to pick the names that are winning, are in the front of the line, and not extreme discounts to their potential. There's obviously money to be made, maybe, in Adobe, but yeah. Tin, are you interested in data centers for 2026? Most definitely. Most definitely. Very, very interested. Nebius. I'm looking at NVIDIA. Looking at a lot of those things. Shopify, I like Shopify, yeah. SoFi is up nice today. Yeah, what is it, 4.8%? Someone also said, I saved your comment. Tanner, could you please tell us about your status on Shift 4? Nothing's changed, okay? Nothing's changed for me. I believe in the company. There is a disconnect on their growth versus what I think the market is giving them. I like the name. I went out for dinner yesterday, paid on a Shift 4 terminal. Gave the girl a big tip because I thought, hey, I'm just going to get it back in Shift 4 value. Do you ever feel that way? Like you'll buy something and be like, yeah, but I own the company. Even though you buy a new iPhone, you're like, yeah, but I hold Apple stock. But what's actually returning to you is like 0.000001 cent. Okay. I saw Global Blue stuff at Marriott hotels. Nice. Do you hold Palantir? No, I do not. No. I hold all the things that are green right now. I hold Nebius, NVIDIA, SoFi. Shopify, I don't think is doing that well, but that's fine. We brushed that one off. When's an ASML deep dive? Maybe one day. Okay. But my mega caps are hurting. Yeah, but like the stock price is hurting, but are you even hurt? Is that going to change the way you go to sleep? Do you think anything is affected at Meta, Microsoft, Google for you to even be remotely worried? Or is this just impatience? Tanner slammed his big green candle on the table. I hold all the things. No, I'm betting on AI. AI is doing well. That's what's happening right now. Is there anything you don't own on your radar? No, I mean, if it's on, I'm looking at Coinbase. We need to talk about Coinbase. I mean, I'm feeling very confident in Coinbase right now. I was listening to a video by Coin Bureau earlier, if you guys know who that is, and they were talking about how Ethereum's bull case is threatened by the layer 2s, and that what really is winning is Base. There's no question on if we believe that the large financial institutions are starting to move a lot of their money on chain. That's happening. BlackRock, JP Morgan, all of these businesses are going on chain. But is potentially Coinbase through Base the real company that's making a lot of that real profit? And it's not going to some, decentralized Ethereum currency and burning off, or no, it's just revenue going to a business that is making other products and benefiting on transactions. Brian Armstrong is fumbling Base hard. I would like to know why. I don't feel that way. What does that even mean? Is there something I'm missing there? I think Base is doing fantastic. And Brian Armstrong is a 10 out of 10. Did you see Tom Lee's reasoning for the dilution? We can watch it. I did see it. I've seen it like twice now. But yeah, I don't know. Strategic acquisitions, stock splits, everything like this. I think, the thing that's going to change everyone's sentiment on BMR is if Ethereum moves. If it doesn't move, he's scam Lee. If it goes up to 7,000, 9,000, he is Saint Thomas, and all will be forgiven. So right now, it's a terrible video to put out. But if we were just in full bull mode and everything was going well, and then he goes, "Hey, we need 50 billion shares," people are like, give it to him. He's smarter than us. Okay.
Hi there, this is Tom Lee. I'm chairman of BitMine Immersion Technologies, and I made this video to explain to you why BitMine needs to increase its authorized shares. As you know, we're in the midst of our annual shareholder vote, and I want to ask you to vote yes for the authorized shares increase. The details are available in the proxy, and the specific matter I want to talk about is matter of business number 2, to approve the charter amendment to increase the number of authorized shares. Currently, BitMine has 500 million shares authorized, and we want to increase this to 50 billion. Now, many of you are wondering, why would we be increasing shares by such a dramatic amount? And so I want to explain. The first is BitMine needs to conduct capital market activities, including at-the-money transactions, or in the future, convertible instruments or warrants or even preferred stock. We also want to make opportunistic acquisitions, and we would need shares for that. But I think the most important reason we need to increase the authorized shares is we have to accommodate share splits. This is really key and why we're increasing the shares. Let me explain. BitMine's stock price follows the price of Ethereum. So on the x-axis here is the price of Ethereum. The y-axis is BitMine's share price, and this is since July 10th. And as you can see, as Ethereum's price has moved up, BitMine's price has moved. The coefficient in this, it's a rough equation, is roughly 0.015 times the price of ETH plus whatever ETH per share accretion is taking place. Now, keep in mind, Ethereum, in our view, is the future of finance. Larry Fink even wrote about how tokenization is really the biggest innovation in financial market infrastructure since double ledger accounting. And he thinks we're at the beginning of tokenizing all assets. And the good news is most of this is taking place on Ethereum. Look at the number of Wall Street institutions building on Ethereum, and look at the total value locked. The majority of this, vast majority of this is happening on Ethereum. And we've talked about this. This is why we think the price ratio of Ethereum to Bitcoin is really the most important to watch. And if Bitcoin gets to 250,000, which is our view, and Ethereum trades at its 8-year average ratio, that's 12,000 Ethereum. If it gets to the 2021 high, that's 22,000 Ethereum. We believe Ethereum is, because it's the future of finance, well, it's going to be a payment rail that gets to 62,000 Ethereum. But what if Bitcoin gets to 1 million? That would value Ethereum at $250,000.
I get this, but like what Tom is also not saying here is here, wait one sec.
So you can,
if we end up looking here, wait, where was I? Here, we're trading under this amount. So not 0.04, not 0.08, not 0.25. We're trading at 0.033. So we're trading somewhere between these two ratios. It's all what ifs. And that's what people are just a little bit frustrated with, because all the calls that he's made, all this like 8-year average, 2021 high, all this stuff, it's not happening. We've fallen further since his initial call to 12,000. Anyway.
Because it's the future of finance, well, it's going to be a payment rail that gets to 62,000 Ethereum. But what if Bitcoin gets to 1 million? That would value Ethereum at $250,000. So you can imagine, let's take this chart again, that BitMine's price follows Ethereum's price. But then let's look at the future price levels for Ethereum. 22,000, 62,000, and 250,000 Ethereum. Well, using that coefficient, that would put $500 BitMine share price at 22,000 ETH. At 62,000 ETH, 1,500 is the implied price for BitMine. And of course, at $250,000, the implied price for Bitmine is $5,000 a share. Now, of course, this is per share levels. These are implied from using Ethereum's price in that coefficient. But here's the thing, not everybody wants a stock price at 500 or 1500 or 5000. Most people want shares to stay at around 25. So what would be the required split to get Bitmine's share price back to 25? 25.
Listen here, I do not want BMR stock price to stay around 25. I get what he's saying, but bro, you need to address Ethereum going to 22,000. Your team is saying it's going to go down to 1,800, 2,000, by first half of 2026. This is so far out. This is, hey, well, this is where it'll be if we get to $1 million in Bitcoin.
Means it's easier to buy lots of shares at $25 a share than at 5,000, for instance. Well, here's the numbers. At 22,000 ETH, the stock price would have to split 20 to 1 to get back to 25. At 62,000 ETH, the stock would have to split 60 to 1, and the implied split at 250,000 ETH is 100 to 1. Well, what does that mean? As you can see, the current shares outstanding is 426 million, and we're trying to get the authorized share count to 50 billion. That doesn't mean we're issuing 50 billion shares. That's what we want the total max shares to be. Well, here's the math. If you split 20 to 1, the current share count would go to 8.5 billion. If you split 60 to 1, the share count goes to 26 billion. And if you split 100 to 1, the number of shares goes to 43 billion. So you could see it's going to be important to increase the total maximum authorized shares. So going back to this question, why does the company need to increase authorized shares? I think the most important is to accommodate share splits. Keep in mind the shareholder vote deadline.
Do you know what other companies do whenever they need to do stock splits? Do you think Chipotle had planned for a 50 to 1 stock split whenever they did that, years in advance? Hey guys, we need to be prepared whenever Ethereum goes to $250,000. I want to be prepared for whenever Ethereum goes to 1,800. What are you doing then? This is like some broke dude that's like shopping for mega yachts. He's like, I'm going to need to know where to put all this money. Bro, do an annual shareholder meeting next year. Let's figure it out tomorrow. This is why you're scaring the heck out of people. It's because you're going, hey, you know what? This thing's going to the moon. All right. I don't know if there's a rocket ship big enough to fit everyone on Earth. Like, imagine Elon Musk's first rocket was to fit all of humanity. Why don't we just shoot something up and see if it lands? Why don't we try that first, and then we start loading people on? Like, 50 billion is crazy. But yeah, anyway, I'm in it for Ethereum. That's what I'm in there for. And none of the actions that they've taken have scared me to think, that the company is going to somehow go bankrupt or get liquidated or something like this. They're not taking on risky debt or anything along these lines. But some of these, guys, you don't understand. Like, this is for whenever Bitcoin or whenever Ethereum hits 62,500. It's like, and when is that, Tom? Because you have no clue. Because you said it was going to be 12,000. And now we closed lower than whenever you made that claim. Yeah. Okay. No one cares about BMR. I think the other way around. I think, and it's not just about BMR. Like, BMR is just one piece. It's just Ethereum in general. But it's not like BMR is greatly underperforming or something like this. It's like it's down because Ethereum's down. That's the main reason. It's not people are like hating. Well, obviously people hate Tom Lee, but they, maybe they'll hate Vitalik Buterin whenever Ethereum goes down, but they need a finger to point at someone. They need someone to go, that's the reason why we're down. When really it's just like crypto is speculative. The price is lower, and someone wanted to put a price target on it that was extreme, but he's been right in the past, so people were hopeful. Yeah. BMR, let's go. F the Meg 7. Okay, brother. I would keep your BMR position low. And yeah, not everything needs to go back up. Can you put chat on screen, please? Yeah, sorry about that. Sorry, the chat's always on screen for me, so sometimes I forget. Okay. Yep, you're right. Tom put himself in that position. He didn't need to say price targets. And I think the part that is true as well is like finance is going on chain. That's true. That's happening. So yeah, anyway. Robinhood is rolling out shorting on their platform. We can actually take a look here. I took a look at their monthly metrics for December. What we can see is that these were all the numbers that they gave us. It wasn't a full month, like they didn't give us all the data that they usually give us for the other months. So those are like full monthly metrics. This is what they call monthly color. So just a little bit. But anyway, I took the amount of total trading days, looked at the average, and then assumed how many days were left of the year. This is what I got for total December estimated totals if you add on those additional days. Because for December, they only showed us December 1st to 28th. Okay. Then whenever we go down to trading volume here, what we can see is that if we take the same equity take rate and multiply it by the amount of volume that we've gotten over the last 3 months, then that gets us to a certain amount of real revenue. That real revenue looks like transaction-based revenue of 776 million. This will actually be higher than net interest revenue. I just haven't even adjusted it, and even there might be a higher take rate here. That might look a little bit closer to Q3 of 2025. And I think I need to also adjust how many assets under management there were, which I think just got updated to 300 and... Oh, actually, it's a little bit lower than that. I think it'll be closer to about 330. Okay. Yeah, but I don't imagine it's going to be less than Q3. Maybe it will. Like maybe the take will be the same, something like that. Let's just say that for now. Okay. That said, whenever we look at Q4, we're seeing a 30% year-over-year increase in revenue. That is on top of this quarter from Q4 of 2025, which grew 115%. Do you know how hard it is to find a name that grows revenue 115% and then continues to grow above 30% after that at really great margins, at improving margins? Okay. Now, revenue could even come in higher than this if there's something that I'm not taking into account. If outbound instant transfers are higher than we thought, if margin interest is higher than we thought, if the amount that's coming in for net interest revenue is potentially higher. I don't think it'll be lower than this, though, 1.3 billion. So that part's kind of stagnant, but the opportunity is higher. Where's Palantir now? Is it still falling? I just got to think. Yeah, it is. I just got a thing on my phone saying it's like absolutely crashing. Down 5.7% now, 167. Not the best way to start the year. Tanner, update on the SoFi 50 million members spreadsheet after another 2 quarters have gone by. Well, I don't think that I don't think that what do you call it? That 50 million target has changed. He still expects it by Q2 of 2030. Everything software is getting called. Yeah. People don't say called enough. Called is a great word, but it is. Everything is getting called. Look at this. This is unbelievable. UiPath, CrowdStrike, Twilio, Palo Alto, well, Rivian, a little bit in their own field here, but Zeta, Zscaler, Shopify even now down 3%. It's incredible. But some of the actual physical, data center names are doing fine. SoFX up 9%. TeraWulf up 8. SBET up 8.6. Nebius up +7. It doesn't look too bad if you want to invest in AI infrastructure and blockchain, which has been the two big themes. That might change, one day on a Friday while options are getting, figured out, and then we're starting in a new year. We're about to go into big earnings. Hopefully, we also see rate cuts as well in 2026. I think it's going to be a good year. It is a midterm election, but also it's a midterm election of a second-term president, which supposedly is not as bad as the usual midterm years that we see from first-term presidents. Markets are wild, yeah. Don't freak out. It's part of the game. PayPal hit a new low, $58.13. Yeah, I mean that's pretty crazy. I'm not in this name. I bought an absolute like tiny teaser position. I don't know, probably like 2-3 months ago, and then sold it within like very quick succession. As I realized, I was like, you know what? I'd just rather my money in Nebius. Why do I have to fight the market? I'd rather just buy something that's working. TY for the Chime recommendation, I'm up 43%. You're welcome, brother. Yeah, Chime's going to do all right. I just, I think I'm going to rotate out of that name eventually, maybe whenever it hits $35-$40, something like this, and just put that into SoFi. Did you fill 100 Fiscal AI? So the Fiscal AI is not, there's not just 100 of them. I have an unlimited amount of them. I can do as many as we get. The 100 is for the discount and then also the one-on-one calls. But we're about halfway. Which is not too bad for, only doing one stream on it. But it's going to last 2 weeks, roughly. But yeah, the Fiscal AI, there's not only 100. We have an unlimited amount. Am I going to join VG Gang? It definitely looks interesting. Like just the price versus the conviction of some of the better investors than myself are looking at. But no, I don't want to get into a new area and then have to learn about their competitors and stuff like this. Did I see SoFi earnings day? Yeah, January 30th. And then I think Robinhood's was February 10th, if I remember correctly. Do I own Broadcom? No. I wouldn't hate owning Broadcom. I think that would definitely fit into my portfolio, probably very well. Same with TSM or, some of these names. But, and yeah, I don't know. I've seen a couple things from Broadcom, like the Hock Tan's performance packages, specifically for the growth in AI revenue. If he's able to hit those targets, then not only is he getting paid very handsomely, but us as investors are going to get paid very handsomely. That's all very exciting. He's one of the greatest operators of all time. I mean, I love whenever I see like an operator that can sell their pride in order to facilitate a better transaction. So whenever I see like the name Broadcom, for example, that's not Broadcom. Like, the reason why their ticker is AVGO is because that was the original name of the business. Whenever they went to acquire Broadcom, part of the reason was that they would have to change their name for Broadcom, or to Broadcom. But they specifically in that contract, they didn't say that they had to change the ticker, so they never did. But the fact that he, in order to gain access to a company like Broadcom at the valuation that he did and everything, said, "Oh, I'll change the name. I've got like, I've got no problems with what the name of something will be in order to make the business better, in order to make shareholders happier." Real ones call it a Vago. Yeah. SoFi Insider said SoFi is going to start charging $10 a month for the credit card separate from SoFi Plus, would totally destroy the benefits of the card if true. Well, if you're saying that it's going to be $20 a month, that's not going to happen. I don't believe that. Maybe the card separately is $10. But yeah, it's Paul said it. I didn't say it. Okay. I'd cancel my SoFi credit card if they add a fee. The card may require SoFi Plus, though. Yeah, so it's definitely not a great offering once you start adding $10 a month. The 5% cash back could be really interesting for some people, and it's not just about the card being $10. It's about the entire offering being $10. But as like I just tweeted this recently. Where is it? Okay, did I not tweet it? Like, where the heck is it? Oh, here it is. Anthony Inoto said that, we're just getting started. When we ship, it's the beginning, not the end. We're going to address the value prop if it's not working. So I like this a lot, because what he's saying is, and he's referring to comments made about SoFi Plus and everything, and how high school and college students looking to get their money right will not pay $10 a month. He's saying, hey, first of all, college students are going to get a lot of these aspects for free. But also, if $10 a month is not what people are willing to pay, we're not going to die on that hill. We're going to see what works. But just because a bunch of people online, like myself, say that people won't pay $10 a month for a secured card, that doesn't make it true. He's going to see what works and then change it if it doesn't. What's that? A free 1-year trial of Fiscal AI if you buy... Well, I wouldn't even call it a 1-year trial. You get Fiscal AI Pro for a year. And then on top of that, you get 50% off every single year after that. Well, I'm not really supposed to say 50%. I'm supposed to say $240. But yeah. That's the offer. Which, thank you guys so much. Like, people are not giving enough credit to Fiscal AI for giving us that. There's not another place where you can get a discount like that for Fiscal AI. They gave it like completely exclusive for us. They had to build us that offer from scratch for our YouTube channel. Like, that's insane. Beware of anyone selling fear and FOMO. Well, that's the entire media and everything. What a bargain. I don't know if you're being sarcastic or not, but it's actually cheaper to do the course and then another year of Fiscal AI through our promotion than just getting Fiscal AI in general. So it's an insane offer. And then every other year after that, it gets, you keep the discount. It's not a trial. It's like a complete partnership. It's an unbelievable deal. If you use Fiscal AI and if you care about the product. But yeah. Okay, let's go ahead and see what's going on with CNBC. Actually, no. I'm going to head over to Bloomberg, in which Dan Ives was talking. He said tech stocks are going to climb between 20 to 25% in 2026. Let's go ahead and take a look.
Top AI stocks for 2026. Dan Ives writing, heading into 2026, investors are both excited and nervous about the AI revolution. 2026 is an inflection point year. Dan joins us now with his colorful self. Happy New Year. Wonderful to see you.
As always.
So let's talk about that. Why is it an inflection point? What do you mean by that?
It's really about, to me, it's about the second, third, fourth derivatives playing out across AI. Look, it's monetization. And you talk about Tesla, it's the next phase in terms of autonomous, robotics, consumer AI, especially when it comes to Apple. And I think what we're going to see, look, I think it's a prove it year, but that actually makes me more bullish because I think now we go into the next phase of AI. I think tech stocks are up 20, 25% in 2026, but it's not just big tech. It's about second, third, fourth derivatives playing out.
I will be fascinated to see. I don't think anything is officially expected, but you're going to CES, right? Which is not only the biggest tech conference in the world, but it has become the most important car maker conference as well. It'll be fascinating to see if Tesla comes out with any other products there, or if we see a lot more robotics and automation products.
Yeah, and to your point, look, it all starts with the godfather of AI, Jensen. He'll be there with the black leather jacket because when his speech to me is just so important on Monday, because it really starts off strategically what AI is going to look like. He's going to talk about physical AI in terms of autonomous robotics. I think the two best physical AI plays in the world today, it's NVIDIA and it's Tesla. And I think that speaks to you about like Tesla, what everyone's focused on. This is autonomous chapter now coming to Tesla. I think you see Musk right now, wartime CEO. That's the focus when it comes to AI, but also it's the monetization. Remember, only 3% of US companies have gone down the AI path so far.
Are these robots expected to be like B2B robots? So building things in factories, or like a Roomba for consumers? What kind of products do you expect them to monetize?
Yeah, especially at CES, look, humanoid robotics is going to be front and center, autonomous. You're seeing flying cars. A lot of the presence, you talk about a lot of the tensions between US and China. The presence of Chinese companies is going to be, it's going to be a monster in terms of what we see there. I think doubling, over the last few years. But I think it's really going to be about humanoid robotics. It's going to be about autonomous, but this is also going to be about more embedded AI devices that consumers are going to see. CES, we're not just talking about flying drones and refrigerators that talk to you. Now these are much more sort of front and center in terms of it's a who's who. Every big tech player is going to be there, even if they're not unofficially there. They're there to look for acquisition.
I love the idea of opening the refrigerator and having it say, do you really want that? And I can just imagine the future for, move over Ozempic. So there's this question here also about what some of the moves in late 2025 mean. And I'd love your take on this because we saw some acquisitions made by the likes of Meta and NVIDIA. And I just wonder whether there's more cost consciousness and more of a competitive advantage that they're looking to solidify at a time where suddenly companies are saying, hold on, what are we paying for this and what are we actually getting?
Look, I think you hit on a great point because the reality is it's an arms race. That's what's going on with big tech. And right now at the top of that mountain is big tech. And when you look at like Google's win versus DOJ, antitrust, this is sort of go time for big tech. And I think you're going to see more and more acquisitions. And we've talked about not just on enterprise, on energy, and I think really across the board. And it speaks to really what we're seeing right here is that it's not just about big tech getting bigger and bigger, doing acquisitions, spending. You're going to have $600 billion in CapEx in big tech, but it's also going to see other players being like, don't forget about me. Look at AMD. You're going to see look at Cisco, look at IBM. There's going to be a lot of other players saying like, hey, we want to get into that AI party. We don't want to look through the windows like a lot of the bears are.
We were talking about BYD triumphed over Tesla to become the world's biggest electric vehicle manufacturer. We also have seen big tech in China outperform on an equity market perspective in 2025. Do you expect that to continue and for China to really solidify more of its neck and neck position with the U.S. or even supersede it?
Look, I think the reality is for the first time in 30 years, U.S. is ahead of China when it comes to tech. And I think that's very important, obviously led by NVIDIA, Microsoft, Palantir, and others. But in China,
first time in 30 years? I don't know. We got to get a fact check on that. Last time I checked, I'm not going to Google, or I'm not going to Baidu. I'm going to Google and these sort of things. I think we've been in the lead for a while. There's been a lot of hardware stuff, maybe solar panels and batteries and stuff like this that they've caught up on us. But I mean, on the software side, America's been doing just fine.
China, look, we're bullish on China tech. We talk about Alibaba. You look at Tencent. You look at a lot of the other names there. I think what you're seeing is it's a narrowing, but it's something where you're seeing robotics really play front and center, autonomous, EVs, BYD, and others in China. But when you think about how to play it, you have to play U.S. tech, and then there are Chinese tech players to go after. But in terms of AI revolution, like we've said, it's third inning, one out, relative to this AI game. And I think the bears, like I said, like in hibernation mode, they can see AI in the spreadsheets. And I think 2026 is going to be a year that's going to be another bull market year for tech and for AI.
I had really the same question as Lisa again, because we've seen so many stories this morning about Baidu's chip unit filing for an IPO, another chip designer, I think Briner, with a very successful IPO today, maybe another mini DeepSeek moment, right, with a cheaper artificial intelligence, all among the most read stories on the Bloomberg terminal. So clients are paying attention to what's going on in China with AI. How do you bet on that? I mean, do you buy the individual stocks? Is there an ETF that you like? Do you have some of these stocks in your ETF?
Yeah, sure. So obviously, for the Ives ETF, I mean, what we really focus on is the AI 30. It was like, who are the 30 winners? We have a few of the Chinese players in there. I think Baidu, you look at Huawei in terms of the success they're having. Look, right now, NVIDIA's 4 to 5 years ahead of any other chip player. And I think that's well known. That's why even a third-rate H200 restricted, China big tech's going to line up despite what the politics in Beijing. But this is an arms race. It's the narrowing of the gap. You want to play some of those Chinese tech players. But the reality is in the U.S., from NVIDIA, AMD, we talk about our top 5, Palantir, CrowdStrike, and cybersecurity. Tesla, I think it's going to be the most important year ever for them. Microsoft, I think on hyperscale right now, Microsoft, Oracle, those are names, I think, table pounders in my opinion in terms of what we see. And then Apple, finally, they come to the AI party instead of being on the treadmill at 2.0 speed. And now they actually start to get in terms of the consumer AI revolution, $75 to $100 per share.
There's only one company that you didn't mention that's on your list, and that's Microsoft. Where is Microsoft in terms of winning out versus Google? Who is its main competitor?
Look, in terms of Redmond, the enterprise, this is their backyard. When you think about companies that are moving to AI, the first phone call goes to Nadella. And I think you're seeing Google, you're seeing Amazon, what Jassy's doing, they're narrowing the gap and they're going to be successful. But when I look at Microsoft, you have 25, 30 billion incremental monetization. I don't even think factor into street numbers. That's right. And the stock ultimately has a 6 in front of it. And I think this is going to be, we're going to go into January, into earnings season. I think that's going to be kind of the show me story showing like, look, this is not stopping. Like we said, AI party started at 9 p.m. It's now 10:30, 10:45 p.m.
Me and Lisa are asleep.
Yeah, 100%. That's exactly what I was thinking.
But the party goes to 4 a.m. And that's where we are.
I like Dan Ives. What did he even say? Like, what was any of that, dude? Apple's on a treadmill. We're at 10:30 at night. The party's going, but we're also in the third inning. We have one out. The one out was crazy. He's so specific. It's 10:30 at a party. We're also in the third inning with one out. We're on a treadmill. It's 2 speed. What is going on? But he's right. Like the funny thing is, someone compared him to Jim Cramer. He's not, because Jim Cramer's always wrong. Dan Ives is betting on disruptive innovation, so he's always right. But he's not he's not saying much. So the runner's on second, the party's on third. We got 1 out, 1 strike. Okay. And yet he's landing home run after home run. Okay. But you know what? I do think that some people need to look back and or look at these businesses. Every single large company during their earnings call has to continuously update us on what they're doing with artificial intelligence. Why are they spending this money? Not that the future is bright, but what do you actually have on your roadmap? What are the problems and services that you are replacing? And can you put a dollar figure on that? Oh, we're seeing a 5% conversion bump on Instagram Reels, as Meta would say, or a lot of our customer service, 50% of that is now going through artificial intelligence, and that's lowering the amount that people ask for an agent by 80%. That can actually help us save on $8 billion per year, and we look at that as immediate cost savings by artificial intelligence. And we pay once to set up these GPUs, but then we're actually seeing that the GPUs are lasting 6 years, and we're getting more and more benefits out of it, because not only are the models getting more efficient, but they're actually getting more efficient on a per token basis. Like, we're actually getting, in a way, smarter tokens, you know, faster ways to get to the answer. So, yeah. I think they're racing towards the magical AGI. I think everything I've been seeing lately is that AGI is way, like, I actually don't think you're going to see the term AGI come up much anymore. I've been seeing a lot of things where people are pushing that off and they're saying, no, it's 10 years away. We actually need human innovation much more than we thought. And that's actually better. I feel like the only person that's talking about AGI anymore is Elon Musk. And he's the one that I think is full of crap on the actual topic, because I've used his AI products and they all suck. So Sam's not really talking about it. Google's not really talking about it. I mean, they talk about it. I'm not saying they don't. But, like, I think they're trying to address, okay, what can AI do for you today and next year? Let's not look out 5, 10 plus years. Because there's been a lot of, like, if you go back and you say, hey, when's AGI going to come about? Like, Elon and all these guys were saying, like, 2026, 27, 28. And now you're going to be hard-pressed to find an answer that's before 2030. So that's getting pushed. I keep thinking that all these jobs are going to come in. We're going to keep losing jobs and everything like this. We're not seeing it. I keep feeling like we're making employees more useful. And then by making employees more useful, they can get more done. And by getting more done, it justifies their salary even more. Because, you know, they're doing 10x more and getting paid $150,000. It's even better. Okay. Yes, but B. Martin, you're 100% right, and this is across everything. This is just delayed gratification. Overestimate the short term, underestimate the long term. Do this in artificial intelligence. Do this in every company you're following. Do this whenever you're going and working out. You know, the first run is not going to make you skinny. 5 years of running, you're going to be a lot skinnier than you would ever imagine. Okay? You'll be looking like Chep Kogi out there after 5 years. No, you won't. I'm lying, but you get it. Are we getting more done or just doing the same with less effort? Yeah, but if you're putting in, like, if it's making more efficient time, then you can do, like, if it takes you 2 hours to do what it used to take you 8 hours, well, do 4 times that amount now. You know, AI is running on Ozempic. Why is NVIDIA fading? Let's see. NVIDIA up 1.2%. I think this is a sort of Friday options. I know everyone makes fun of like Amit or myself, whatever I say this, but a lot of this, like whenever you go down to the software names, this is rotation. This is algos potentially. There's not even really a big name that says, hey, you know what? AppLovin's got to go down 8% today. You know what we've run up? You know what we've run up is software. The extremely high margin, fast moving, best companies in the world, they've gone too far. Tanner, you're not impressed with FSD? I am. And that's not what I'm referring to. I'm more referring to Grok and those types of products. I'm definitely impressed with FSD. Not impressed with Tesla's valuation. If you guys saw the deliveries and everything, and that's not including the cost, like the total EV commodity index that tracks all the actual raw material that go into making those batteries and EVs in general, is skyrocketing. So that might not affect sales unless prices are also climbing, but we're not really seeing that yet. So that affects margin on the bottom line. And then whenever you take a look at production and deliveries for Tesla being worse than before, or worse than expected. If I'm not mistaken, Q4 of 2022 was higher than Q4 of 2025. That's crazy. You know, look at these shoulders. I'm all shoulders right now. I'm going to lose my neck thinking about Tesla. That's how much I'm. And then I got to go and pay $1.45 trillion because someone has a pay package. That does not guarantee success. And you know what I say? I'm just playing devil's advocate right now because I am such a believer in Elon Musk. I think he's, you know, if not the greatest first principles thinker of all time. Like, if someone can do it, it's him. But the numbers just ain't adding up. Okay. Ethereum's way, sorry, Ethereum. I've got BMR on the brain. Lithium's way down. Yeah, but if you look at the total commodity index, which Trueflation will show you, there's nothing down about it. You look at all the products that go into it, it's one direction, up. But yeah. It's become clear who has moats in the semis, such as NVIDIA and ASML, but who has the moats in software? Do you think Gemini and Palantir and Zeta? What are some software stock? Well, I don't think that it is clear that NVIDIA, ASML is a different story, but that NVIDIA does have a moat. I think that's why we're getting the valuation that we're seeing. You know, if you look at Palantir, that is signs of a moat. That's high valuation, high belief. NVIDIA, I don't think, has that. Okay. Anyone that treats women like Elon is a cretin. Okay, but I didn't refer to that at all. Like sometimes I say, okay, he's the best he's the best first principles thinker. And the people go, he Heil Hitlered in front of everyone. I go, okay, he's the best first principles thinker. He's a great engineer. Tanner, he supported Donald Trump. He's the best first. Not talking about his politics. Okay. But also the only thing that I would add to that, it is not good. There's no left or right side of politics that are like, nah, I'm never buying an NVIDIA GPU. They don't care about Jensen. And that is a great place to be in. Okay. Whereas Elon, he goes, oh, you know what? I'm out of politics. And every single day he's talking about immigration. And that might be good for some people to hear on X, but I don't know if Somalians are lining up out of the door to go buy a Tesla now. And then even if he's like, oh, okay, you know what? I'm off that subject. I'm going to go over and tackle this problem now, which is a part of this community or blah, blah, blah. The Somalians are like, oh, okay, Elon's done picking on us. We're going to come back and go buy Teslas now. No, you've just exiled that community now. Okay, now you're going to go work on this community. And then the left, like, I think he needs to get off of X, man. You're running a business. You're running multiple businesses. Somalians, yeah, go on his X. It's the only thing he's typing about on X right now is, yeah. So Curtis in chat says there's more important things than money. I get it. But on this show, the pick a stock show, let's find out which companies can find the most customers and the most amount of revenue. Dude, he's the richest person on earth. But M-Dog, you're not, okay? And you're not betting. Investing is not about putting your money in the company that makes the most revenue, okay? That'd be very easy. It's about what is the rate of change and how much more can they do past this. That is investing. So he might not care. And for real, I agree with you. Okay? But I need to invest in the people who do care, who want to make more money, because then that's how I make more money. And for real, I don't think he cares. He's past the part of make it. That's not FU money. That's like, okay, I'm going to go buy an army. Like, so I like the products. I like FSD. I like, I've been in Teslas. Like, I think they're comfortable. They're beautiful cars. I like all of that. But production and deliveries are down, and the cost to make those products are up. And then everyone goes, yeah, but you can't put a price on FSD. You can't put a price on Optimus. Guys, watch me. I'm doing it live. I'm not buying this stock right here. I've put a price on it and it's lower than 450. It's lower than it's lower than 440. It's lower than 350. It's probably lower than 300. It's so unbelievably expensive. And then people want to lop my head off whenever I say it, like, oh, you got, oh, I didn't realize you, you voted for Kamala Harris. I didn't realize you were a pussy, bro. No, I'm just buying a company that I think is going to make more money over time. Also, I'm Canadian. I didn't realize you were Canadian, bro. Yeah, that part is true. But love your guys' politics. Love your guys' products. I love America. America. And in doing so, I'll invest in NVIDIA. Okay. Textbook Canadian communist. Yeah, no, I agree. I think there's a price to pay for Tesla. Why would I not want to bet on a car company that I think is going to win over time? Like, I think products win at the end of the day. But not at this price. Tanner, will you ever go to Turkey for hair transplant? You think I'm just wearing hats now for... Okay, well, hold on a sec. Let me get a better angle. Do you think I'm going to Turkey for a hair transplant? I've got hair. Dang it. All right, you got me. Let's go watch some stock videos, shall we? I got to put this hat on now. You guys got me feeling a certain way. Warren Buffett, new video on Warren Buffett 2 hours ago about Greg Abel. Can we talk about people that we love, by the way? Warren Buffett, for real, his entire life has had a perfect reputation. What an amazing dude. Still, what is he, 96 now? How old is Warren? 95. Sorry, I didn't mean to say that he looks older than his age. You look 95. You look 94, Warren. He looks better than his age. I didn't mean to insult. Let's go ahead and watch this video.
Actually handing over the CEO title at Berkshire Hathaway to Greg Abel. Here's what Buffett had to say about Abel in an exclusive interview with CNBC's Becky Quick.
And Greg's operated more than I have when you get right down to it. I mean, he's gone over to England to run something. He went to, he came to Omaha one time to run a business for a few years, and there's no secret formula that only CEOs have or anything of the sort. So I'd rather have Greg handling my money than any of the top investment advisors or any of the top CEOs of the United States.
That is a huge endorsement.
It is a huge endorsement, but it's an endorsement we've made, and I am going to have him handling the money of the, in effect, he knows business.
CNBC senior markets commentator Mike Santoli here at Post 9. Now, of course, you've followed the company. You've been to a lot of their annual meetings, the shareholder meetings over the years. Just thoughts on this change and what you just heard?
It's an unusually long kind of lead up to somebody grabbing a job like this, right? So Greg Abel's run the non-insurance businesses of Berkshire Hathaway for like 7 or 8 years. So very much a known quantity, had his hands in that kind of sprawling side of things, and has been the designated successor for over 4 years. So I think that in terms of everybody being prepared for how this was going to go, it's hard to ask for more. If anything, it might have been a little bit of a slow transition. Some outstanding questions, though, as the decider, as Buffett called him, is, I think some make an argument that the non-insurance, non-investments side of Berkshire Hathaway arguably is undermanaged. Maybe there's not enough attempts to kind of centralize some functions, maybe even have it, kind of report up to other people as opposed to everything reporting up to the CEO. Maybe that's going to happen. Maybe part of that was happening with some of these recent reshufflings in the management ranks. I do think other things you're going to have to consider are capital return. It's funny, all the charts of Berkshire Hathaway shares relative to the S&P 500 over the last 20 years, let's say, it's massively outperformed. It's up like, 750, 800% relative to 450 for the S&P. But on the total return basis, because the S&P pays dividends, it's actually closer. Berkshire still outperformed, but it's closer. So people will maybe say, yeah, Warren Buffett got away with it because he said, I can multiply your money more faster than you could in your own pocket. We'll see. I don't think it's urgent. I like the way the stock is traded here relative to the NASDAQ 100 over 2 years. That's that chart. And it just shows you how when things look dicey and there's stress on most of the market, it's the ultimate haven. And it was the biggest market cap company outside of tech, basically. And it sort of got the benefit of scared capital going in that direction. And now capital's not particularly scared right now in tech, even though it's softened up a little bit, and therefore Berkshire underperformed. I would also point out all public insurance stocks did not have a good year last year. Right. And that's,
Can you just remind us the breakdown of how much of it is the insurance businesses versus the non-insurance versus the investments?
Well, the investments are, $300-some billion in current mark to market, and then there's $380 billion in cash, right? So that's like 680 right there. That's just kind of a portfolio, if you want to think about it that way. It's like half the public market cap. Yeah, it's huge. And then I think the rest of it is split kind of half and half in terms of insurance and non-insurance businesses, but it's like dozens of companies under the non-insurance side. So I think that's where they're looking for the big acquisitions, most likely. Not in railroads, they've said. So who knows where?
Surprisingly not.
We'll see. They kind of just wait for opportunities to surface as opposed to kind of beating the bushes and saying, we decide we want to have an acquisition in the home building area or something like that. And there are a lot of home construction related businesses inside of Berkshire. I don't think it was a strategy, but there's Clayton Homes, which is kind of modular homes, and then there's like, you know, the drywall and the flooring.
The flooring, Shaw, and do they still own that one?
They are, yes, and they own Benjamin Moore. Paint.
Oh, wow.
So, you know, a lot of that is sort of related, but kind of accidentally.
It'll be interesting to watch the next chapter.
For sure.
Thank you, Mike. Mike Santoli.
I am going to be sad if Warren Buffett ever leaves us. Maybe he doesn't. Maybe we see a health breakthrough and he just stays around forever. No, he's always been not a like mentor is such a weird word, but I've followed all the interviews, covered what he did. Like I probably listened to that 2001 college speech. I forget where it is. Maybe it's Berkeley. I forget where it is. I probably listen to that like once a year. He's such a fantastic speaker. Yeah, he's a role model. Good role model. Yeah, you're right. That's the word. We have a golden visa with your name on it. Yeah, you guys saw you in the chat just talking about where I can move to in the States. Yeah. Okay. Let's go ahead and see. SoFi was up 5% on the day. Just for a quick second here. Let's see if they can hold above that. But right now, oh, maybe. Bring it home. We still got about an hour or so hour and 45 till the markets close. But it's looking like a good day for SoFi, especially if you were able to buy it in the $25 ranges here. Tanner hugs maple trees. I don't go outside enough to say I do that. But what else? Chime up 4.4%, $26.27. Reddit up 4%. Ethereum up 3.9%. I'm telling you guys, it's a good day for my portfolio. Unless Nvidia is really turning around here, in which that's going to change everything. 1.3%. I liked it above 190, especially above 192. Much better. Shark Ninja's up 1.2%. Speaking of Dan Ives, we are above 1% on the Ives ETF, AI ETF, but the volume here. Wow, they're almost at $1 billion in assets under management. And then versus Tom Lee, I wonder if his Granny Shots ETF has... Nope, it's only continued to improve. Nearly $4 billion in AUM. I was wondering if maybe the BMR commentary has swayed some investors in the Granny Shots ETF, which, by the way, there's now 3 funds of Granny Shot ETFs, and SoFi is the only company in all 3 of them. Which Mag 7s do you own? Nvidia, Meta, Amazon, Google. Is that it? Yeah. And I don't have Tesla, Apple, or Microsoft. So I'm 4 out of 7 right now. And if I was to add another one, I'd add Microsoft. It's only 10 p.m. It's not even 10:30. It's 10. Okay. The week leading up to earnings in October for SoFi ran to the 30s. Yes, that's completely true. Once people start re-looking at SoFi's numbers, it usually follows where it should have been the entire time. So there's a couple companies like that you just sort of start to see trading patterns on, like Nubank, for example, usually goes up for 3 months and then on earnings takes a little bit of a dip and then goes up for 3 months and then takes a dip. SoFi, I find, can be stagnant for 3 months and then going into earnings take a big pop. And then it's sort of 50-50 coin flip on if earnings is going to, be positive or drop lower. Oh, I forgot I have a meeting, so I have to go. I got to get ready. Okay. I am going to CES, so I'll be back like super, super late Wednesday. That means I'll be live Thursday. I hope to get videos out while I'm there, but it's most likely, I always think I'm going to be working and then I'm not. I'm hanging out with people. There's too much to look at CES. It was random, sorry, but I just got a 10-minute notification on my call for 2:30. So, okay, what is any last regards? Yeah, Happy New Year's. Happy New Year's, everyone. 2026 is going to be a great year. Okay? Keep that in your heads. Be positive. Don't let this crazy media storm that is literally designed to feed you negative information because they get more clicks that way and feed you more advertising. Things are not that bad. Okay? Bad stuff's going to happen to all of us, but most likely you're better off today than where you were before. Keep up those high spirits. I promise you'll live a better life with a smile on it. So, yeah. Thank you all so much for watching. Really do appreciate your time. Bye for now.